All right, good morning, everyone. It is 9:25 in the morning of August 1st, 2022, and this is my pre-market strategy session. And the title of the video is As the Yield Curve Inverts. And basically, what that means is here's a weekly chart of the 10-year minus the 2-year. And so it goes negative when the 2-year yield is higher than the 10-year yield. And you can see here back at the end of March, this is a weekly chart, at the end of March, it inverted, popped back out again, and then started coming back into inversion. And what can happen is that this is a very reliable indicator of a recession coming, and economic turmoil or economic downturn, and then a subsequent downturn in U.S. equity markets. But it doesn't happen if you go back and you look. So I have these three examples here. The downturn on the market doesn't happen until the yield curve starts to normalize again. So here's June of 1990, January of 2001, May of 2007, and then 2022 or 2020 actually came really close. So here it is. Okay, here it is in August of 2019, and then here it is in February of 2020. And this, of course, the cerveza sickness, my Sharona virus. There's all sorts of names for it, so that people don't get gigged on YouTube. But essentially, it couldn't have come at a better time. All of the stimulus checks and easy money Fed policy and so forth really saved the market as the whole pandemic thing started to happen. And so it was this inversion and subsequent rise doesn't necessarily correspond. I mean, there was the crash, but it was not the same. The sickness coming when it did sort of caused things to accelerate and recover extremely quickly. So I'll show you here. Let's just kind of go back to the SPY here. And so, here's where the yield curve inverted, and then inverted again, or got close to inverting again, and here's where the Fed stepped in. And so this is a bit of an anomaly. This is a sort of a different situation than what I was describing back here in this time frame right here. So in these time frames right here, though, as the yield curve inverts, the market continued to go up. And it wasn't until, the yield curve was going down and didn't normalize again until, it started to invert. Actually, it started to invert back here in April of 98, and then inverted in a strong way in January of 2000. And the market didn't start to go down until the rate started to normalize in January of 2001. So, I mean, that was like a 3-year, long drawn out 3-year thing. So this really could, this could go on for a while, this inversion, and then the subsequent move down on the market, the reaction on the market. It could be quite some time before the market reacts to the inverted yield curve, which actually it will probably only start to really react to it once the yield curve starts to normalize. So where are we now? Right now, this is the weekly SPY. We're getting ready to start a new week here. And as of right now, it's trying to push to new recent highs and get past for this resistance area at roughly 415. And I really wouldn't be surprised to see it happen. Apparently, the Europeans have begun to stimulate again, and their central bank is easing on rates. So inflation is going to look really quite high in Europe, but that's not bad for stocks. Inflation, causes the price of everything to go up, and so if you're in the market to buy stocks, you're buying stocks at a higher price. Same thing with the Qs. The Qs are trying to break through. I put a Fibonacci on the Qs here, just kind of curious to see how it would do. And there's nothing really that I see. I mean, we're coming up on the 38.2 level here. So if 304.14, roughly $304, acts as support, and then it launches there and goes to 38.2, then my this Fibonacci will be somewhat reliable, but it still needs to play out. So 322.54 is overhead resistance right now. 304.14 is support. But I'm still just going to wait and see if this pattern actually plays out. You can see here it made a dive down to 38.2 and then back up to the close to the 75. Oh, I'm sorry, that's the 25% level. All right, so what? I killed that alarm too quickly. IXSE. Oh well, I didn't get to see what it was. I'll have to go back and look at the video. And then, okay, in Bitcoin, now here's one. So this is the head and shoulders pattern that's playing out on Bitcoin right here. And this neckline right here ought to act as resistance. Now, it can break above this neckline, but it won't last long. If it breaks back up above this neckline right here, it'll die off and continue going down. And this is going to be the pattern for the foreseeable future for Bitcoin. It's really kind of just on its way down until something fundamentally changes. And actually, you know what? Let me take a look at Baba real quick. Let's see. Alibaba Group. So this is the head and shoulders pattern that occurred back here in October of 2020 in Alibaba. And you can see here this neckline. This is the head and shoulders pattern. And then here's the neckline. And it's just ever since the reversal occurred, it's just been down, down, down for Alibaba. This trend line has been in play and just continues to kind of dominate the direction of Alibaba. Eventually, at some point, something will change, and the price per share of Alibaba will turn around and start to either move sideways or up again. But for the time being, this trend is still in place and not broken. But you can see here also, after it broke down, it popped up above the trend line again and went down, and then but generally speaking, it's downward, and so Bitcoin is most likely going to do the same thing here for the foreseeable future. I mean, we're talking couple, 2, 3, 5 years. Who knows? All right, everybody. Good luck out there. Keep your risk tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am